Hey, good morning, you beautiful human beings, guys. It is Monday. I'm so happy to be back with you guys live in pounds for breakfast. Now, you're watching us live. Massive kudos to you. Let me know where in the world you are joining us from. You're watching after the fact. As always, let us know where in the world you're joining us from, what's happening, correspond. Comments. I'll always reply personally to all of the comments, so you will get a direct reply from me. So we have a ton to talk about in the next couple of minutes to give you everything you need to know and so much more about what is happening in the markets this week. Now, first and foremost, I must say, if you're new to trading, our community is expanding substantially, right? So if you're brand new to trading, this is an exciting place to be. Again, we encourage learning, we encourage transparency, and I should probably put on my extra light. There we go. So we encourage for you to take these steps, but to do it safely, right? It's an extremely exciting time being December to trade. There's a lot of opportunities that most people miss because they kind of turn down for December. They turn their minds off. But if you're new to trading, there's going to be some massive opportunities. And I'm going to show you just a few of them in the next couple of minutes. So firstly, you're new to trading, let us know in the comments. Massive welcome. We trust this will become your new home and that you'll feel safe and easy enough to ask questions. Put up your hand when you need help. That is what it's all about. Now, if you haven't yet done so already, a brand new social community is down below. Now, everything we are going to be discussing today will be in the social side. I have already posted some of the links for this morning's details and information. You may want to go ahead and check out and just go over to the social area and you'll have a look at what to know this week, right? In that article, there are the links for basically the things I'm going to be discussing this morning, right? So if you go over there, you'll be able to get everything you need to know. And you'll be able to obviously read side by side in terms of what it is that we are doing. So big week this week, right? We have a couple big events happening this week. First being CPI, Consumer Price Index, or otherwise known as Consumer Inflation Data. That's coming out on Tuesday. And then Wednesday, we hear from Powell, right? Powell's going to come and decide to either completely wreck the markets or, give the markets a bit of a boost. Now, there's a bit of things we need to know about this. And there's quite a few estimates that some of the big Wall Street houses are giving out. Again, always take these things with a pinch of salt, right? They're never giving out free information, right? They're investment houses, they're trading for clients, they are hedge funds. Their goal is profitability, right? So when we talk about news and agendas, this is obviously one of the big ones. Now, it's interesting to read and understand what these guys are thinking and talking about, but always, as I said, take it with a bit of a pinch of salt. So I've shared the article already inside our social area. Go ahead and click that and obviously read through. But obviously two big items, right? As I mentioned, we have the CPI that is out on Tuesday, and that's going to basically give a reading of consumer inflation data, right? Now, this might be the last big data piece we need to solve the puzzle of inflation. And that then leads us into Wednesday, where we get Powell that's basically going to address, what is happening in terms of interest rates. Now, some interesting things that I'd like to obviously speak about. Obviously, on the 1st of December, we got not necessarily directly from him, but basically from the Federal Reserve, we got a lot of information that's saying, hey, listen, discussions of any sort of rate cuts are premature. If anything, we're going to obviously take a more restrictive stance, etc. So it is obviously quite interesting to see when we see some big names, right? JP Morgan, as an example, their chief economist says that he doesn't think that Powell will even discuss any sort of rate cut decisions, right? Now, why is this so important? Why is this so big for investors? Two reasons, right? First thing is that we've seen the data come out that supports that the efforts that the Federal Reserve have done have supported, slowing down inflation. They've done everything they need to do to essentially set the US economy up for a soft landing, meaning not really a recession type environment, rather softer landing where unemployment ticked slightly higher. They cooled the spending because remember, all they did is inject the economy with a bunch of money, cut interest rates, created a whole bunch of stimulated the economy artificially. Now they need to solve that. The large consensus that has been done. The next big question for investors, for Wall Street, for pretty much the world at a whole is, are these interest rates going to be now officially paused? Have we hit the ceiling? First thing. And second thing is, when will we start to see rate cuts in the next year? That's what investors are mostly looking at. Now, the reason these things are so important is that high interest rates attract investors to different type of instruments, right? Government bonds that yield safe, government-backed security type instruments generally perform very, very well when interest rates are high. And that's what we saw as interest rates were lifted over 2020, 2021, right? We saw that most investors were pivoting to safer territories But now that we see this ceiling is potentially being hit, and we get confirmation that ceiling being hit, and some sort of insight as to when these rates will start to drop, this, as I've explained in the past, will encourage investors to go closer towards Wall Street and slightly riskier assets that yield higher results, right? Because again, the interest that they're earning on these government-backed securities will start to fall as interest rates start to fall, right? So very, very important. That is why we're seeing a big shift in the movement of US City, NASDAQ, S&P 500, etc. Is where a lot of activity is sitting at the moment. So Wednesday night should unlock the key. But interesting, we see that obviously, as I just mentioned, JP Morgan mentions that they don't think that Powell will engage in a ton of discussions regarding cutting rates, and we see different opinions here, right? Michael Pierce, lead economist at Oxford Economies, sees a slightly hawkish approach from Powell, meaning a slightly less warm, a slightly more aggressive approach that will hint to keep interest rates higher for longer, right? And that is generally the consensus, right? If anything, we expect policymakers to keep on the side of leaving rates too high for too long. Now, why is this, right? US is obviously leading the fight or the battle on inflation. Whatever they do will trickle and have impacts, ripple effects around the world. Now, the US can't be seen to be weak on this particular issue, right? Inflation is a big, big issue. They obviously have a bunch of other geopolitical issues that are currently happening around the world with regards to war, etc. This is not one area they can start seen or be seen to be weak on, right? So it's obviously super important. Now, if you're part of Premium Plus, we will be streaming this live on Wednesday evening. I will put that in the economic calendar for Premium Plus, right? So if you're a Premium Plus member, we'll be doing this one live. It'll be a nice small group. We're going to have fun, play some music, deal with Powell and his discussions. We may trade, we may not trade. It'll depend on how the markets are moving, what sort of volatility there is. Now, if you guys were part of non-farm payrolls and you were part of all the Instagram shenanigans of people going live and calling out the direction beforehand, you obviously saw the chaos that happened in the market. That's why I tell people, just ignore some of the hype, ignore some of the craziness around these events. One of the comments was someone who went live was, either we go blue or we go blown, right? Either your account goes blue or it blows, right? Which I think is the most insane thing I've ever heard in my life. Either you make a slight profit or you blow your accounts. Needless to say, everybody watching or in that particular live event of this new broker that they formed, which is B-Book, which means if people lose their money, it's their profit. What happened? You guessed it. They blew everybody's live accounts in that live session. It's so bad. Anyway, if you want to be part of an STP broker that has zero conflict of interest to you, that has an interest in you making money for longer, being more successful as a trader, and obviously you know where to go, TD Markets is the place to be. Pure STP accounts, not A-Book, not B-Book, pure STP. It's Rolls Royce of trading accounts. The link is down in the description if you'd like to get your hands on that. Now, moving on, obviously we have Wednesday, which is fairly big from a macroeconomic perspective. From an earnings report, just to touch on some of the company names that are releasing some data, we've got Adobe and we've got Costco. Those are the two main entities that are releasing their quarterly earnings reports, right? These are 13th of December, which is Wednesday evening, and then 14th of December, that's Thursday evening, both after market close. That we will see that data come out, right? So not massive, will move the markets. Adobe obviously part of NASDAQ, Costco obviously part of that S&P 500, may move the markets, may just give a general sentiment on how companies have performed from an earnings perspective, right? So just something to watch out for. Just having a look at the S&P 500 heat map across the board from Friday. Obviously most items green across the board. Last week was a massive performing week for indices across the board. And generally, indices basically smashed it. From a fundamental data perspective for today, we are in the clear. There's nothing of high importance for today that is scheduled. Now, again, doesn't mean nothing can't pop up. Anything can pop up, as we've seen in the past. Any sort of comments from the Fed, we want to watch out for. That will swing market opinion. Any sort of big comments from any sort of Wall Street names, any speculators, will swing market opinion. So we obviously want to make sure we are aware of that. Now, in terms of markets, in terms of trades, some very, very interesting trade setups that I think you guys are going to love. I'm going to start off this morning with having a look at gold. A lot of talk about gold. Now, I've explained in the past, and it was actually in part of our intro scene there in the beginning, that we were looking at gold, reaching this triple top and what would it end up doing. Now, you guys saw on Monday last week how gold pretty much spiked almost $150 one way, a total of about $250 move that gold spiked up to that $2,141 to an ounce of gold, and then basically pulled back down. Now, I've noted this zone, and I've told you guys in the past about this zone that we needed to be careful of. And some of the entry points that we were mainly looking at for gold was gold hitting one of these previous highs, or one of these previous market tops, right? One of these previous resistance zones. So we talked about potentially shorting gold minimum the 2060 mark, then the 2070, and then the 2080 potentially. So there were a few of you that sent me screenshots over the course of last week. We had a bit of a holiday week last week, busy shuffling around staff, shuffling around programs and services, etc. So we do apologize. Last week was a super slow week. Not a lot of trading that we did last week. However, I did see quite a few screenshots from you guys that were shorting out gold from around these levels. So if you're part of the people that shorted out gold, those levels, massive, well done. Now, you may be asking, well, what now? What do we do? Right. So interestingly, this is obviously on a daily time frame, 4-hour time frame. We're seeing gold start to really stall out at this market bottom. Now, I just want you to pay attention to this market structure that we're seeing from the end of November, so basically for the month of December. I just want you to keep your eye over here as I zoom in. We're going to drop in onto an hour, and what you'll start to see is that we might be approaching a critical support level in our time and our sort of story of gold at the moment. So what we're looking out for this morning is any sort of dollar weakness that could allow gold to make some of these recoveries and sort of claw back some of the losses that we've seen specifically and primarily over this last week. Obviously the 4th, we saw that massive shoot that was on Monday, and pretty much from that shoot we've basically seen declines across the board on gold. Now this is strange due to the fact that obviously we've seen that weaker dollar primarily over this last period. So I do think gold is well set up and positioned here for some sort of redemption move, right? Now again, we've got this market low that's happened here, right? Another key sign that you'll be able to tell, if we have a look at the RSI here, again, we're starting to see, you know, those oversold territories, whilst we're no longer making those lower lows, right? So that's valid. That's no longer valid, right? Again, we're not making those low lows. So RSI is telling us we could see a little bit of divergence here, in the sense that we're running out of sellers in this area. So how do we deal with this, and how do we treat this from a trading perspective, right? So we've got a market bottom here. Gold's already made that market bottom at 1995, right? We've got that previous low also corresponds to 1995. So how do we deal with this, right? Just from a pure price action perspective, we can start to see that breakout has happened, right? I'll even drop down to a minute to make it evidently clear for you what it is that we're seeing here, right? So if you have a look at this price action, I highly advise people who are trading in the mornings to just have a look at a minute time frame and just look for any sort of deviation in structure, primarily from early hours of the mornings, 1 a.m., 2 a.m. to where we are now. You see we made that market bottom. Again, a much clearer picture on the RSI from a 1 minute time frame of that divergence, in the sense of, again, we're making those lower lows, right, from a price action perspective, but RSI is telling us this market's setting out from a buyer's perspective. So as we sit right here, this is where we will start to look for some buy opportunities. And again, you can potentially look at about a 30 pip stop loss, nice and neat, nice and tidy. Look for a stop loss or holding a stop loss here around that 1994 region. Now, you may say, but Dan, why did we just hold a stop loss 1995, right? What you often will notice with gold and with most basically pairs is that you'll end up seeing the retest happen, but at a slightly lower level, right? So that's why we would look for a 1994 stop loss that will allow a little bit more meat on the bone here and allow for about a 35 pip stop loss somewhere around about that region. So I'm really looking at the potential of gold going long and recovering some of these losses, potentially even getting as high as, let's quickly pull out our fib there, getting as high as potentially 2024, but a bare minimum of 2017, right? So we're looking at about 200 pips here on gold. So you may want to pay some attention to that. Again, keep it neat, keep it tidy. 30, 35 pip stop loss, a 200 pip TP, nice risk reward ratio there. You're looking at a reward to risk ratio of potentially 7 or 8x, right? Over all the trades, obviously much more. So just keep that in mind, and it can obviously have the potential to reverse in totality. Now, why do I say it has the potential to reverse in totality and continue moving higher? Well, again, we've just spoken about it with regards to Powell. If Powell signals or Powell is slightly more dovish, towards the US economy, saying, hey, listen, interest rates seem to have been cooled. The decisions and the policies we've put into place seem to have been working, and we no longer going to rise rates. I must also mention that basically there's 100% consensus that there won't be a rate hike for this particular meeting, right? Sorry, I forgot to mention that a little bit earlier. There's 100% consensus across the board. There won't be another rate hike. However, it comes down then to the sentiment, right? This is really like playing a game of poker with a politician, because again, they've got to give away as little as possible while keeping the market as strong as possible. So we're looking again between that hawkish and dovish approach. As I mentioned in the past, dovish approach is a little bit more of a lovey, sensitive, hey, everything we're doing is working, there's nothing to worry about, everything is great. A little bit of a softer approach. Hawkish is a little bit more aggressive, a little bit more, we will do anything in our power to solve this problem, etc. A little bit more of a, sort of tough love kind of approach. So that is what we're looking for. However, I think in most cases, the data has pulled through. And again, Tuesday's CPI data will be that final confirmation over whether inflation has truly slowed down, specifically on the consumer spending side of things. If it has, this will signal that for certain we will see some rate cuts in the next year. And it's also important to mention that the Federal Reserve will present their dot plot charts, right? Which is basically, where they vote as a group, where they vote, they think rates will go in the next year. And that dot plot chart will also show us where there's a consensus of rate cuts. So that's super important. Investors are going to be looking at that. But I think in either event, what we can expect to see here is that we are going to expect to see the dollar weaken with these interest rate reductions potentially for next year. And I think this meeting will signal that. Now remember, people aren't trading for today, what happens today. Investors are making decisions long-term based on what they see today, right? Again, with regards to bonds and government yielding assets, right? Any sort of sign of weakness in interest rates will start to trigger that that smart money move from safe government, high interest, high yielding bonds over into Wall Street and riskier assets, right? So that is what we're really looking for. If you have a look at where gold is priced right now, a weaker dollar means that we will see gold rise, right? So we're looking at that, and we're looking at that from a perfect storm perspective. But again, if you're part of Premium Plus, we will be covering this live on Wednesday evening when Powell has that speech. Now, only other item I really want to talk about, which I think is super exciting from a price action perspective, is US30. Beautiful price action. It doesn't get any better than this, right? I want you to have a look at US30 in terms of that market high there, right? This is a daily time frame. We've discussed this in quite a bit of detail in terms of 2022, 2021, and where we are currently, right? US30 is absolutely smashing it. I must also just say really quickly, guys, now we see a lot of things online about yields, investments, and things like that, right? I just want to point out something really quickly. Again, it's in the article that I provided you guys with what you need to know this week, right? You can go ahead into our social environment, hit that link. Again, also available to you if you don't have your live account. Go ahead and hit that STP broker partner to DVDM markets, get your live account open up. But the important thing I just want to point out here, right, really quickly, and I want you guys just to have a look at here, is that I want to just also point out that when we start to look at the S&P 500, we start to look at the US 100, etc., right? The US 100 for this year, right, has performed at over 30%, right? I just want to quickly get to it, right? The NASDAQ, right, the US 100 has gained 38% this year, right? So what does that mean? It means that if you were just an investor into the NASDAQ, meaning you weren't smart money, you weren't making it super complicated, you were simply just investing into the NASDAQ in a 1-to-1 ratio, not CFDs, not leveraged products, literally just taking $1,000, putting it into the NASDAQ, right? You would have yielded 38% for this year alone, right? Through all the turmoil, through all the chaos, through everything. So when we talk about banks giving you back 5, 6, 7% on your money, right? They re-lending out your money. They're doing crazy things with your money. And when people hear yields of like 10%, 15, 20% for a year, they go, that must be a scam, right? Yes, high yielding rates, be cautious of. But here we talk about the NASDAQ, right? The top US 100 tech companies, right? That have gained almost 40% for the year, and the year isn't even done yet. December still has options and probability to push single, even double-digit figures over and above that, right? So I just want to point that out, right? That if your money was just sitting in the NASDAQ, Now, if you're a trader, we have what's called leverage, right? Which makes it even better. A 38% move, even with 10% leverage, could have been 380% if you're stuck into the NASDAQ long term. But anyway, that's not financial advice. We're here for entertainment and educational purposes only. I just wanted to point that out. It's just a mind-blowing number, just to show you that through all the turmoil, through all the chaos in the world, the NASDAQ still managed to do 38% on its own. Never mind Bitcoin or any of these other items, right? So anyway, US 30, super excited about it from a price action perspective on a daily time frame. You can go ahead and draw this out. And really what you will find is that is going to basically be the performance for 2023, right? A parallel channel 2023. What you'll see is we are hitting the ceiling. Now the ceilings is super important. You can further break this down on a 4-hour to just tighten up that ceiling, and what you'll start to see is that right there. So I'm looking at a little bit of an inverse setup for the start of this week, but I'm looking at potentially taking in some shorts on US 30, primarily to basically cool off this monster performance that we obviously had Thursday and Friday. That's basically been a straightforward rocket to this higher levels, and these are massive resistance levels, right? If we look at these zones that US 30 is hitting, these are massive resistance levels. Now what I'm obviously looking at is just to make sure and having a look primarily, does the US 30, right, does it close below that 1st of December mark, right? That 1st of December high that we saw and then retraced off of, does it close below that? In addition to that, that same 1st December mark also represents essentially that little high that we got from that NFP move that we saw on Friday, right? So NFP basically shot up there, retraced beautifully from a fib level perspective. Let's quickly just get to it. I quickly want to show you how beautiful the Fibonacci levels are. So we saw that massive move there. I'm gonna quickly need to just so we saw that little push there from the NASDAQ. We saw it from the non-farm payrolls. Markets pushed up, pulled back down beautifully to the 61.8, that golden retracement ratio of Fibonacci, and then pushed on further. So that is quite a key level in terms of that push on Friday. Now I want to have a look at this today. Do we get the US 30 breaking down below that level? If we do, that will trigger off some sells, right? And in order to monitor that, I'll give you the exact level itself, but we are looking at that 36. Let's see here. Specifically, we're looking at $36,295 to 1 US 30 or Dow Jones Industrial Average market share there, right? If we trigger down below that, there's also going to be a channel that we can observe on a 5-minute time frame that will give us a little bit of perspective here, and you'll start to see this is looking a little bit like a descending triangle, right? But what we can do to kind of map this one out is we can look at those market bottoms, right? And any sort of push below that, we can obviously just look at as a trigger for either a pending order or for a market setup there, just to get short in below that 36,293, 94, 95 level. So those are the two levels I definitely want everybody to be aware of and pay attention to. Now, yes, these are inverse, right? We are looking at gold longs, US 30 shorts. Now, people may say, but Dane, aren't these supposed to move together? Yes, but as we've seen over Friday, as we've seen over Thursday, right, gold has fallen. Pretty much over the whole of last week, gold has tumbled while indices across the board have taken off to the sky. So those are the two I'm watching quite intensely. Our new signal service or adapted signal service is also kicking in today. So you will receive trade opportunities directly into our social area. Again, once we hit 500 pips, the trades will be only available in Premium Plus. Premium Plus is definitely where you want to be. You have a TDM live STP account of more than $100 in, you're able to get Premium Plus for less than $1 a day. You get a ton of value and so much more, right? Again, if you're part of Premium Plus, we will be doing CPI, which is tomorrow. We will be covering that live. We're not going to be pulling a dodgy broker live guessing game here. We will be covering it live. If there's opportunities of break structure, we will be obviously discussing that, but we will also be doing Power Live. That is all part of Premium Plus for less than $1 a day, a ton of value. To all of our new members in Premium Plus, massive welcome to you guys. To Nico, to Ntumi Baloy, that is in the comments there. Massive welcome, guys. Thank you for joining us. If you're watching this after the fact, leave a comment. What is your favorite trade that you've seen? Is it gold? Is it US 30? And what's your opinion about Powell? I'd love to know your guys' feedback And do you think the US inflation or the US spending is going to slow down? Or do you think we're going to see a lower than expected or higher than expected CPI reading tomorrow, right? That's going to set the tone for the balance of the year. Now, in my personal opinion, again, this is my opinion, it's not financial advice or anything else, right? This is education, entertainment. My personal opinion is that we're going to see a record-breaking month for December. I think we're going to see markets outperform even the levels we've currently seen, right? So yes, I've got a temporary short opportunity on US 30, but I do think we're going to break some of these levels. We're going to make some serious records for December. Now, again, we've been doing a December analysis, right, which is going to come to fruition. And you're going to see some amazing things towards the end of December in terms of the trends that we've seen. But if you want to go ahead and do it yourself, go back and look at, December for the last couple of years, and you'll see a trend, a very specific trend, right? And I hope you guys catch that. If you're part of Premium Plus, I'll reveal that to you. If you're not, it's just a free tip. Go ahead and have a look at that. So signals will be flowing. We're going to have a great week this week. As always, you know the drill. Be safe. Trade safe. I'll see you guys a little bit later, and much love to every single one of you, and see you guys later. Bye.